Hello, everyone. My name is Samar Sen, and I'm the head of APAC for Talos. We're the leading provider of digital asset trading tech to the buy side and the sell side. And I am super excited to be hosting this chat today with Diogo Monica, the founder of Anchorage Digital, a pioneering firm that we know very well here at Talos and we really admire. And we're going to be talking about the Anchorage origin story, future plans, bridging the gap between institutions and crypto markets. So welcome, Diego, and hope you're doing well today.
I'm doing fantastic. Thank you for having me, Samar.
Awesome. Let's get into it. So, firstly, you've got an amazing background that's actually quite different from other folks that are covering institutional entrance to crypto. Can you give us a brief overview of yourself, your journey in tech, and what eventually led you to, the inspiration to start Anchorage?
Yeah, you would expect that more crypto founders, especially folks working in core infrastructure, such as custodians, would actually have a background in cybersecurity. But as you mentioned, that actually does not seem to be the case. But Nathan and I both are security engineers. But going back a little bit, I was born in the US, grew up in Portugal, and did my master's, my bachelor's, and my PhD in something that was not popular at all 20 years ago, which was distributed systems in security. And now all of blockchain is distributed systems. So it's actually been very lucky on my part to have an academic career in an area that now becomes obviously extremely exciting in the world. And then in 2011, a company called Square flew me out of Lisbon. And actually, it was 15 years ago that myself and my co-founder at Anchorage, Nathan McCauley, joined the same week. So we've been working together every day for 15 years. We led the security team at Square for 4 years. We ended up going to a company called Docker for 3 years, which runs on every single cloud server on the internet. And then about 7 years ago, we started Anchorage Digital. And really, the reason why it started was because there was a crypto fund that had lost a passphrase to a $1.5 million Bitcoin wallet and offered us 20% if I could break into it. And so that was a fascinating entry into the world of cryptocurrency, how very sophisticated investors actually turns out are not very sophisticated when it comes to private key custody and operational security.
Yeah, thank you for the background. Very cool story. Crossing the Atlantic and having a great career as well in big tech. So, look, what are the main challenges that institutions face when they want to enter the crypto market? And how does a firm like yours kind of give them a helping hand into this world?
Yeah, so one of the interesting things about Anchorage is that we were the first and are still the only federally chartered crypto bank. What that means is that in the United States, we have a charter that is the same charter as JP Morgan Chase, as BNY Mellon, as Goldman Sachs. And we are regulated by the oldest banking regulator in the United States, which is the OCC, the Office of the Controller of the Currency. That just immediately sets us apart in a unique category, N of one. We are completely unique, partly because under SEC rules, we are the only unambiguous qualified custodian in the United States. And the reason why that's extremely important is if you look at the institutional market in large institutions, today they work with banks. They work with institutions that are regulated for all the different products that they have, for their commodities, for their equities, for their fixed income, etc. And in crypto, somehow we are to expect that institutions won't want to work with this highest level of regulation in the land. It obviously seems unintuitive that that's the case. And what we're seeing is the reason why institutions were, to a large extent, being held back from entrance in the system was not just regulation, it was regulated entities and services that really matched that institutional grades that we have in the name for these institutions. So the way that we help is very simple. We provide very high-end security in a platform that supports hundreds of assets and that allows people to custody, stake, do governance, settle, etc., with the regulatory charter that nobody else has. And that just makes it extremely easy for very large institutions, anywhere from sovereign wealth funds to American banks to fintechs like Visa, to just come into the space and onboard onto Anchorage and go to their risk committee and say, hey, this is a bank like the other banks, except that it's extremely specialized in security. And to your point previously, this is why it's extremely helpful that this company was founded by two security engineers, because really at the end of the day, the core security really is the biggest selling point and the biggest focus for us.
Thank you. Yeah. So, yeah, I would agree that, you have, when you have like a, let's say a hedge fund or a crypto fund that wants to enter the market and they really don't know where to begin, and everyone warns them about how to safe keep their assets, and then be able to invest, and connect to the ecosystem. It's very challenging. And a firm like yours, it sounds like, bridges that gap, right? So what further steps do you believe are necessary to bridge traditional financial institutions effectively into this ecosystem? Because we've come a long way, but there's still some way to go.
Yes, I love it. And I love that your question has the title of the presentation and of our session built into it. So, bridging the gap, I love that you introduced that in there. So there's many things that are standing in the way still, but a lot of them have been knocked off. And at this point, I can confidently say that the large majority of the reasons why institutions wouldn't come are already no longer existent. And the facts are that large institutions are already here. That is 100% true. And I see it at Anchorage's client base. The largest institutions in the world, anywhere from sovereign wealth funds to BlackRock to the largest banks, already have a crypto play, already have crypto assets. We announced that we're actually custodying BUIDL, right? The BlackRock tokenized money market fund. We have custody for some of the largest corporates that have crypto on their balance sheet. And so it's already been done. There's a playbook for many of these things. And I think the answer varies significantly. If we're talking about Bitcoin, it's a very established asset. It's an asset that is very uncomplicated, for which there's many players across time that have actually offered services in it. It's the highest liquid asset. We already have ETFs, and so to a certain extent, even not direct, approval from the SEC, sort of implicit approval that this asset class comes from the SEC when the ETFs for Ethereum actually get accepted. But that's just not the case for all these other assets. Ethereum has staking is a lot more complicated. Right now, there's a lot of excitement about the ETH ETF. Will it be approved? Will it not be approved? And it is more complicated than the Bitcoin ETF because it is a stakeable asset and is an asset that generates yield. There's tax complications, there's technical complications, is technically more sophisticated and more complex than Ethereum, has a lot more failure modes. And so that just makes it harder and harder. And that is one of the big reasons as to why maybe institutions haven't fully made the transition. As you go on the long tail of assets, networks like Solana that have different use cases, have different profiles, have they're just younger networks. Just means that institutions are a little bit less hesitant, but they've already done the first step into crypto. And so we can very much expect them to increase their participation across the board for all crypto assets. And the hardest one really to get was the first in.
Yeah, no, I would agree. I'm curious to know, has the approval of the spot Bitcoin ETF since the beginning of this year impacted Anchorage's business in a positive way?
Yes, absolutely. I think impacted all of the crypto ecosystem. Whether we like it or not, the United States hasn't been friendly towards crypto from a regulatory perspective, and the United States is still the largest economy in the world, or close to it, depending on how you measure it. And for crypto is absolutely number one. And so having the number one crypto economy in the world have a validation that the SEC won't be able to stand in our way and that the rule of law will apply, and that if there are products and services that the private sector wants to offer that are completely legal and have all of the building blocks necessary for it to be institutional grade, then they will be eventually accepted. That's just a message that is sent to the whole market. And so Anchorage benefited both directly with more deposits, but also indirectly in the sense that there's a rising tide that raises all boats in the crypto ecosystem.
Yeah, no, I would agree with that. And based on, some of these recent developments, do you think that this has impacted the strategies of institutional investors as they get more sophisticated?
Yes, it has. It's kind of an interesting thing where institutions now actually are thinking through whether they should wait for the ETF to show up, whether they should directly own the asset. And the interesting thing is that now there's a view of some institutions of, hey, I want to own the asset directly before the ETF is approved. I don't want to pay fees on top of this. And I want to actually get ahead of the curve. And so for every new ETF, now there's this internal conversation before it shows up in every institution saying, hey, should we get in before or after this event? Do we care about the ability of having an ETF in my traditional portfolio that in some cases gives you more liquidity because I can margin against it, like I margin any other assets? Or do I actually want to potentially get better returns by entering before? This conversation is happening in every single investment committee in every single one of these companies that has already taken a step into crypto, which is so it's fascinating. There's a forced conversation happening at every single step of approval of every single other ETF. And we get those calls because obviously Anchorage Digital Bank is the right place for custody to happen. And actually, funny enough, our bank charter says in the approved services that we can provide that staking is one of them. So there's actually OCC condoning staking as a service that Anchorage Digital Bank can do. So for all these new networks, which as you know are essentially all of them except Bitcoin that are proof of stake, this matters deeply. It is significant dilution that you have or loss that you have on an annual basis if you're not capturing these. And there's tax complications and technical complications that we've solved and have solved for a long time. And so it's pretty exciting to be at this stage and have all these institutions be excited about every single ETF edition. And as we're seeing with the price action over the past 24 hours, people care, and it's market moving in the sense that it's pretty exciting, and a lot of the market is waiting for these.
No, no, I completely agree with you, and I share your sentiment too. Th As you and I know, there's so much happening in this industry, and it moves really fast. There's a lot of new areas as well, whether it's in tokenization of assets or innovations in DeFi. What are the areas that excite you the most right now, and why? I'm just curious to know, like, and whether institutions are also sort of demanding these services too.
Yeah, well, they absolutely are. To answer the last part of the question, after BlackRock fired the starting gun for RWAs, right? Tokenization, yes, of money market funds to start with, but pretty clearly next is other types of fixed income strategies. And then you clearly see equity tokenization. Then you see baskets of equities. You see obviously tokenization of commodities already happening in other countries, in the Middle East, UAE, in Bahrain, and other countries that actually have strategies around an issuance of RWAs that are actually our commodity first. So there's just strategy and strategic bets being put all across the world to see who goes and who gets it there first, because obviously there's a lot of benefits from having a first mover advantage. And that's one of the sad things about the regulatory environment in the United States is that it is stopping us from being the first ones. And the lucky thing is that we were and still are 99.9% of all stablecoin activity. And so going to stablecoins, it is an expansion of the dollar dominance if stablecoins continue winning. And we should get ourselves get out of our own way and continue increasing the actual popularity of these because it benefits the United States. The thing personally that I'm the most excited about is the potential disruption that is going to come from yielding stablecoins. So far, stablecoins, when they were created, obviously were a great alternative to the dollar. They're digital dollar, they're programmable, they're instant settlements. They have tons of advantages, can move them 24/7, 365, and they're self-custodiable. So you can actually keep self-custody of them. However, now with 5.5 federal interest rates, holding a stablecoin is obviously a big opportunity cost. And in the United States, depending on how you look at it, but if there's a stablecoin that is generating yield, it becomes very hard for you to make the argument that is not a security because there is some equivalence and some expectation of return there. And so internationally, there's a big movement towards the creation of the first natively yielding stablecoin that will yield just because you're holding it. That would be a game changer. So I do think that USDT and USDC, the two biggest, most popular stable coins, are being threatened and can be disrupted, which is funny because they themselves are a disruptive technology that has only existed for a few years, but they themselves are risking being disrupted by something else that comes and very quickly takes liquidity from them. Because why would you want a stable coin that generates zero yield as a consumer and as an institution if you could have a stable coin that generates 5.5 and is technically equivalent?
Yeah, interesting. I'm gonna stay tuned, look out for some of these new disruptors. Let's talk about Anchorage itself, right? You guys have been innovating a lot recently, and I kind of wanted to get into a couple of your new product launches where they might not be new anymore. But I wanted to talk first about Porto and then Atlas. So maybe we could talk about Porto first. Do you want to briefly give the audience an overview of what it is and what the implications are for institutions?
100%. So Porto, it's the website is porto.xyz, is a self-custodial offer that we have with all of the security and the technology that Anchorage built. So think about Anchorage, the same institutional grade technology, but in a self-custodial capacity. The reality is that there's lots of types of participation and types of institutions that don't have the same requirements as or have within the same organization different requirements for a different portion of their assets. If you want a regulated bank to keep your assets safe and is a traditional asset that has popular support, then absolutely use Anchorage Digital Bank, our main offering. However, if you want to go and integrate, say, with Wallet Connect and participate in DeFi and do governance, then it becomes a lot easier for you to actually have a platform that allows you to do so from a self-custodial ability. So it really extends the product services and the capabilities of the Anchorage platform. It makes it very easy to go from a regulated full custodial solution to a self-custodial solution on the other side. So think about it as expanding the types of services and the types of participation that the platform offers by directly integrating to DeFi or directly integrating to even more assets. So that's really what Porto has allowed us to do. It's allowed us to extend our offering and extend the types of services and integrations that we can do in a faster way by facilitating things that are harder to do from a regulatory environment and a regulatory regulated regime, such as full Wallet Connect integration. And then
Yeah, look,
on
congrats. Yeah, Atlas.
yeah, and on the Atlas side really is a recognition that Anchorage is the right player to allow settlements to happen between crypto parties. Why? Because we have the only federal chartered bank, and you care deeply when you're settling about counterparty risk. You care deeply about bankruptcy remoteness. You care deeply about the safety and security of the platform. These are very high amounts of dollar equivalent and that are being settled. So you want an API and infrastructure and custodian in a regulatory regime that has been battle tested to do so. So there's been a lot of attempts in the market at providing a settlement network, but we have been in market for over 7 years. We are one of the, if not the dominant player, certainly the dominant player in the institutional side. So the recognition that within Anchorage is actually the right place to create a network where participants can have settlements instantly of their assets in a way that reduces the risk was absolutely like an obvious move for us to do, and one that we've been thinking about doing for a long time. So very exciting product launches, very exciting capabilities that Anchorage now provides.
Yeah, congrats, Diogo, on these product launches. Exciting stuff. Um, as we sort of as we talk about the future and try to like sort of wrap this up, we still have a good 10 minutes left, but what are some of the exciting milestones for the rest of the year or next year that we should be expecting to see from Anchorage?
So definitely expansion of all of the products and services. And one of the things that we talk about, obviously, which is obvious, is the crypto market continues to change. There's new protocols being launched. There's new capabilities being offered. If you go back all the way to the inception of the company, we supported Bitcoin as the first asset. Bitcoin did nothing. It just sits there, which is fantastic. It's sort of what it's supposed to do. However, the moment Ethereum came along, Ethereum forced all the players to support new types of capabilities. Smart contracts now created the ICO boom and allowed anyone to really issue new assets on top of them. That means that you now have to have capabilities around smart contracts. And then proof of stake assets started showing up, which means that you have to integrate, run nodes, actively participate in consensus in a way that you're just not forced in Bitcoin because it is a miner network and you don't really have to mine to be a participant in the network. And then you have governance. Governance became very popular and it is very popular and continues to be more and more popular. People want to exercise their governance rights, especially if you, like us, Anchorage, deal with largely institutions. And if you're dealing with large institutions, mean that they usually are large holders of these networks and not allowing these institutions to participate in the governance of the network, actually is taking a lot of the votes and a lot of the capability of influencing the network in a positive direction forward. And we don't really want abstention in terms of voting. So you want participation, and the protocol founders really want this and push a lot of their institutional investors to do it. So you have to support that. And then all of a sudden you have all of these other capabilities. You have vesting contracts, you have all sorts of bridges and swaps and new technology that shows up that as an institutional provider, you're constantly trying to maintain and keep up with. So something that you will continue seeing is Anchorage supporting new assets, supporting new capabilities, and doing so faster within both the regulated platforms that we have, but also in the self-custodial portal system that we're now providing for our institutions. The other thing they're going to see is deeper integrations into some of these applications in DeFi. There's no reason why institutions shouldn't be able to participate and shouldn't be able to directly integrate through things and integrations like Wallet Connect into any of the services that they were like, in that their internal risk profile allows them to or guides them to. And then in terms of actual services, we'll continue investing heavily in Atlas. It's something that I'm particularly excited about. It is a business with network effects. It is a business that is a major unlock in the United States. We're also obviously looking at yield and stable coins and being able to provide our clients that have the asset that is the most popular asset across all of our clients, which is dollars. Every single one of them has dollars, and not every single one of them has Bitcoin, which is surprising. And so yields on stable coins, yield on dollars, and the ability of generating rewards across the platform, whether it's from staking, whether it's from just maintaining on the platform, something that continues to be extremely important for us and that we'll focus on the future. Then more partnerships, RWAs, we already support BUIDL by BlackRock, so we're a custodian for that, which is extremely exciting. We are expecting and already seeing more of that coming, not just from other players, but from BlackRock themselves. They have been leading the pack here, but they're not the only player. And there's a lot more types of tokenization that is now coming now that I mentioned that the starting gun has gone off.
Yeah, busy product roadmap ahead. Sounds like you're going to have a lot in your hands, which is good. Changing tack a little bit, reflecting on your journey at Anchorage and some of the lessons you've learned as an entrepreneur, is there any advice you would give yourself or to a founder right now who's currently navigating the challenges of the institutional crypto market?
I think maybe the biggest one would be nothing is ever as good or as bad as it seems. I know it sounds silly, but it is something that is sort of personal mantra. And as an entrepreneur, every day you wake up and you get punched in the face. That's just the job, is getting punched in the face. And you have to deal with it in a way that doesn't drag your and the actual mood of all of your team down, because then you're impacting execution. On the other end, the highs also should not be taken as we have won, because in crypto, no, crypto has not won. And so there's no business in crypto that can really point and say they have won. There's a lot of work to do. The market is still in its infancy. We have so many headwinds, even though right now, obviously, we also have a lot of tailwinds. So it's a constant fight. You're constantly getting punched in the face. And I constantly remind myself that nothing is ever as good or as bad as it seems. And that also applies to external announcements from competition, from the market, from regulators. Nothing is ever as good or as bad as it seems.
No, that's a good one, Diogo. I also can relate to that, and I'm sure many of the founders out there tuning in probably empathize as well. So it's good advice. You personally are expanding your role a bit, right? There was an announcement that you're joining Huan Ventures as a GP. How does that impact your role and your personal journey?
Yeah, so now I have three jobs. I promoted myself to executive chairman of Anchorage, where I'm very active and continue being involved on a daily basis with the company. I am also the chairman of the Near Foundation, obviously very exciting layer one, and I'm personal friends with Ilya, the founder. And I am now also very excited to be a general partner at On Ventures, where I'm going to professionalize my angel investment career. I've angel invested over the past 9 years in over 125 different companies. And so I've been doing this for a long time. And it was the right time, given how well Anchorage is doing and how well we've actually stacked up the C-level team. Very recently, we hired Aaron Schnark as a COO, which was the ex-CEO of Coinbase Custody. We have a really stacked C-level team. And that allowed me to take a little bit of a step back in terms of day-to-day responsibilities, become executive chairman of the board, and dedicate a lot of time of something that I'm also incredibly passionate about, which is investing in the crypto ecosystem. I've put a lot of angel checks in and I've participating from the sidelines, but it was time to professionalize it and to really go in and be able to write large checks. And I can tell you that I'm actually officially haven't even joined, and I've already led 2 rounds. And so I'm the I'm
Nice.
the worst capital allocator because I'm doing a pro bono VC as it stands right now.
No, no, congrats on taking on new challenges and just growing as a leader. It's great. Great to hear.
I appreciate
Look,
that.
I wanted to thank you so much for your time today, Diogo. It was a pleasure to chat. I hope to bump into you again in person soon. I wanted to thank all our viewers. We hope the session was interesting for everyone. To thank the organizers, SCB 10X and Bloomberg. Is there a way that you could share with the audience the best way to find out more about Anchorage, website or whatever?
That's right. Anchorage.com is the right website for Anchorage. And I'm at Diogo Monica on Twitter or diogomonica.com. That also helps if you want to reach out to me. My DMs are open.
All right. Just wanted to say thanks again to everyone and goodbye.
Have a good one.